Good morning, everybody. Welcome to the Flow Show. Busy old day today. Got a lot of moves going on. I'm feeling a bit behind the curve this morning. Feel like I'm chasing my tail a bit, trying to catch up and get ahead of everything that's going on. But we shall crack on nonetheless. Right, over in China, few headlines out. Apparently, the latest piece is that they're looking at a potential 142 billion capital injection into their top banks. Such funding will mainly come from the issuance of new special sovereign bonds. I have to look it up. I couldn't find it on a quick search, but I think we had this story earlier on in the year, if I don't recall. I think it was about 124 billion or something they were going to throw at it. It reads very similar, but it's doing the rounds again, being dragged up among all the other easing headlines that's going on. So I don't think it's anything new, but like me, the market might have forgotten about it in terms of when that story first came out. But that's doing the rounds as well, adding to what we're seeing moves in China at the moment. The South China Morning Post, which is a bit of a mouthpiece, or can be a bit of a mouthpiece for the Chinese state, was out with a bit of a critical story overnight, saying that the mortgage cut in China is still inefficient to move the needle and boost spending. So, as I say, a little bit of dissent there over these rate moves and this easing and its potential effect. Not that that's stopping China stocks at the moment. We're seeing those pretty much dragging everything else up behind them. Another big day for Chinese stocks. We had that big move initially. We had a gap open, although it finished down on the day. It still finished higher than the previous day, and now we've seen another fairly substantial move too. So the market over there at least getting the message, likely with a gun to its head, but getting the message nonetheless. And as I said, this is really dragging global stocks up with it, a sea of green, as you can see there, across nearly all stock markets as well. So this is continuing. It's going to keep the risk on play going for a bit longer, and you can measure that against some of the commodities that you can see. I won't look at gas because that's potentially moving on other things. Where's my old copper? There we go. Let's have a look at copper, which is still, oh, wakey, trading view. Okay, now we're hitting technical problems. Come on. Nope, not going to get a chart. I'll have to leave it there. Anyway, yeah, that's up as well still. Gold's higher. As I said, stocks are higher. Yields have been recovering a bit as well. So, yeah, this risk-on mood. Oh, there we go. Wakey. As I said, this risk-on mood that we are seeing. Bloody hell, still going slow. Is going to continue for a bit longer, it seems, and we're going to see currencies, commodity currencies, etc., moving with it. So keep an eye on your Aussie dollars, your Kiwis, your CADs, and the like. Even the quid could be a bit of a commodity currency when it feels like it. Moving on, something we need to be aware of, and I'll need to do a bit of research for the chat room, probably after we finish the show. We've got the Japan leadership contest or selection happening tomorrow, the results of which we should be getting tomorrow. I'm not sure how it all works, how many rounds it is, but we should know who the leader's going to be by the time we all wake up tomorrow. So that could be a big market mover for the yen and Japanese assets, depending on who gets it. It's really going to be a case between the sort of whether it stays in the same vein as Kishida and Abe, or whether there's a bit of a shift to someone who's maybe a bit more progressive or wants to shake things up a bit. One of the runners who is a potential danger to the yen is not in close range, shall we say, of the leadership, but things could change. So I'll do a bit of digging, as I say, for the chat room to see who the runners and riders are and who's going to be dovish, hawkish, bearish or bullish for Japan and their assets. But that's happening. So keep an eye on your yen trades overnight and into tomorrow. A bit of data out this morning. Not too much. We've had Spanish PPI coming in, another negative, down 1.3%. Also, Spain retail sales were out and they were up a healthy 2.3% year on year versus 1.4 expected and 1.1 previously. So things are looking like improving in Spain, hence why they jacked up their GDP forecasts for 24, 25, 26. Right, can I just get a quick check that everything's working okay on the show today? I'm not seeing any comments. Oh, there you go, Brian's up. Okay, cool. There you go. Just want to make sure those were working on the old Zoom. Right, over to the S&P and the much anticipated rate cut. They went 25 pips in the end. They changed their inflation forecast for this year to 1.2% from 1.3%, so a small drop there. However, 2025, they dropped it a big chunk from 1.1% to 0.6%, which is, by definition, a dovish move. They also chopped 2026 inflation to 0.7 from 1%, so a big downshift in inflation expectations for next year and the year after. Now, as I've been banging on about, 2024 forecasts, when we're just entering the last quarter of the year, don't really count for much. If you can't get your forecast right with 3 months left to go, then it doesn't mean much. So really the focus is shifting to forecasts for 2025, and that's what the market will be moving on. No one's going to bat an eye if a government moves forecast by a pip or two for 2024. It would matter more what they do for 2025 because the market is always looking ahead. But back to the S&P, the statement said further cuts may become necessary in the coming quarters, and as usual, they're prepared to intervene in FX markets. Jordan said that the 25 pip cut was the right decision for the moment. We've had a sources piece out on the ECB saying that an October rate decision is being seen as wide open. Apparently, the Doves are going to fight for an October rate cut after seeing all this weak data, but obviously likely to face resistance from the Hawks arguing for a pause. So, well, there's always going to be that battle going on at every meeting at the moment. But it is ramping up expectations for the October meeting as these are crept up as the weeks progressed. So it's always about knowing where the market is sitting going in. So expectations are now high that the ECB act in October, which means if they don't, then we're going to see a big reaction the other way. Obviously, as we've learned from the Fed, these expectations can swing like a pendulum day to day, hour to hour even. So we've got a long way to go before that ECB meeting, but know which way the wind is blowing each day. A little bit of data from yesterday in the US. Just keeping half an eye on the mortgage, the MBA stuff. Another positive number in mortgage applications. Also, the purchase index ticking up, refi index ticking up as well. Rate came down only a couple of pips. It'd been come down quite significantly prior to that. So we're still seeing a bit of decent activity in US housing, particularly mortgage market, which is a positive for the housing. Fed Kugler said she strongly supported the 50 pip rate cut, will support additional rate cuts going forward if progress on inflation continues as she expects. She says, I don't see that we will overshoot on inflation. You might want to timestamp that comment in the same vein that they never saw inflation coming a few years ago. But anyway, We do have a big old list of central bank speakers today. Let me see if I can just get that up for you. One moment. Give me a second, just so you can get an idea. Boom, boom, boom. So there we go. Obviously, we've done the SNB, but there's a big central bank conference thing going on, and a lot of these bods are speaking there. So we've got Lagarde, De Guindos, Schäuble, Kugler again, Bowman, Powell. Pretty much half the FOMC are speaking today. Various subjects. Some of them may be monetary policy, some of them may not be. So a ton of that to look forward to. Most of them, fortunately, all come in a period of about an hour. So we'll get them over and done with, and then we can all move on with our lives. But that's just to give you a little bit of a heads up what's coming up later. On the data front, today we've got final GDP numbers coming out from the US, as well as durable goods stuff. Now it's not going to be much, unless there's a real huge variation in some of these numbers. The GDP isn't going to count for anything as a final reading. We're just about to shut the door on Q3, so no one really gives a monkeys about old Q2 data now. But just look in case there is something big in there that the market decides it wants to jump around on. As I said, we've got durable goods coming out as well, which is probably more of an important data point in terms of particularly the consumer, looking at things like white goods and whatnot. We've been speaking about how China might have to change its rhetoric and its tone and its conversations with the West. It seems to be doing that. They've been having a chat with the UK on military matters, discussing bilateral defence ties. That follows being heavily involved in talks with Germany over the last few days regarding EU tariffs, cars and chips and all the rest of it. So I'm seeing China involved in talks headlines popping up more and more now. So they do seem to be trying to shift around, but whether it changes anything right now doesn't seem that way. But talking's better than not. So that may play into things as well, as we've been saying. For the US holiday, upcoming US holiday, we've obviously got Thanksgiving and all that palaver coming up. Adobe are expecting holiday spend of 240.8 billion, which will be up 8.4% over last year. Now, back in the old days, you used to take retail data month to month, so you'd have the Thanksgiving period, then you'd have the Christmas period. Now it's really got to take the whole, well, effectively the whole quarter, perhaps as a whole, in terms of what it means for retail sales, because we get all these cyber sales, Black Fridays, Thanksgiving, Christmas. It's the retail landscape has changed compared to the old days, where everyone used to just rush out a week before Christmas and do their shopping. And a lot of this information comes much quicker. In the last couple of years, we've had information on Thanksgiving, the Black Friday, Cyber Monday sales, and the like very quickly after, from some of the online shopping analysts, shall we say, who put together numbers pretty quickly. So it is a big period for the US consumer, big period for a lot of consumers, but you've got to really take everything as a whole for the period rather than just one monthly number. But anyway, that's upcoming. We've got all this Israel Hezbollah stuff going on and on and on. And what started yesterday was Hezbollah really making noises that they are potentially looking to get into a mediation process. Someone associated with Hezbollah said they are working with the US on mediation yesterday. Another source said they are open to any settlement on Gaza and Lebanon. During the day, Secretary of State Blinken said that the US is working tirelessly to avoid a full-blown war. Macron is making himself busy again, as well, saying that France is also working on ceasefire proposals with the US. You remember Macron tried to get involved with Putin at the start of the Ukraine-Russia kickoff, but he didn't come up with anything on that. So he's facing a lot of shit back home politically. So it seems he's trying to get some wins on the international stage. Let's see if he fails to do that again. So anyway, as the day progressed, then we saw that Israeli PM Netanyahu was given a green light, or gave the green light, to discuss with the American side about stopping attacks on Lebanon to give a chance for negotiations. Then this morning, a senior US official said a temporary ceasefire deal to be implemented in the coming hours along the Israel-Lebanon border. A government source said there was a green light for a ceasefire. Then Israeli PM said he's not given a response to the US ceasefire proposal. And then not so long ago, Israeli Foreign Minister Katz says there will be no ceasefire in the north. We will continue to fight against Hezbollah. So it's been a bit up and down all over the place, but it does seem that Hezbollah might be pushing towards trying to get some sort of ceasefire after being hit pretty hard by Israel. If that is the case, it might, the fact that we've got all this chatter suggests that while we're seeing oil markets dropping as well, if there is a solution, a ceasefire and potential peace, then that's going to remove that risk for a while, and you'll see assets readjusting to that. And I'm going to speak more on oil in a moment. The US have managed to half kick the can, probably a bit like a drunkard trying to kick a can. They passed a stopgap bill, and the can's been kicked to the 20th of December, as expected, and as we've been reporting on the last few days. Putin is feeling left out amid all the turmoil. He says we reserve the right of nuclear weapon use in the case of aggression against Russia and Belarus, would consider using nuclear weapons if Russia gets reliable information about the start of a mass cross-border attack by air from strategic and tactical aviation, cruise missiles, drones and hypersonic weapons. They've never really taken the threat of using nukes off the table, but he's coming out and just making that clear to everyone else. And while we're on Ukraine, and this is potentially important for the US election, Trump has said that Zelensky is refusing to make a deal. He's not speaking too kindly of the Ukrainian leader. And that's something we need to keep an eye on if he gets into power at the election, how he handles that situation, because it could lead to a bit of a split or worsening situation over there. If he decides he's going to pull funding and whatnot from the Ukraine, then who knows what's going to happen. So it's a situation that just one thing has got several strings attached to it in terms of the US election and what it means for others going forward. Just reading Patrick, who's in the eye of the storm at the moment. Hope you're staying safe, mate. The latest from oil production over there in the Gulf is now 29% of oil production is shut. That was 16% yesterday due to the hurricane. That's 17% of natural gas is now shut as well. While we're staying on oil, the F.A.C.E dropped a piece a few hours ago that sent oil lower by quite a chunk. It was about the Saudis. I might as well put it up here. And the reason it's dodgy is because the headline says that they're ready to abandon, Saudis are ready to abandon a $100 crude target to take back market share. Now, to my mind, and I'm happy to be corrected, I don't think the Saudis have a price target, definitely not one that they share with anyone. And the only place this $100 target is mentioned is down here when they talk about the IMF, who every year predict what the Saudis need oil at to balance its budget. this year it's $100. Last year it was $80.90 because I looked it up. So the IMF said last year they needed $80.90 to balance their budget. So it's just a bit of accounting forecasting. Okay, so in this story there is no mention that the Saudis have actually got a target. It's a bit of headline spin, shall we say, and I think it's half bullshit. Personally, I've had a little nibble on oil on the back of that headline when I saw it this morning, but I just wanted to highlight this is headline trading for you. Sometimes you read a headline and it doesn't ring true, and you got to know whether the press are just trying to stir something up. Bloomberg are experts at it, as you may know. And given some of the comments in the chat room to this story, it's hooked a lot of people in this morning. So anyway, we shall see, but I'm not believing it and I'm trading against it for now. Right, what else? Staying with oil. And this, I don't know if this was a direct comment to that FT piece, but Russia's Novak came out saying that all OPEC Plus deal participants are in full compliance with the deal and no new proposals or discussions have been had on the terms of the OPEC Plus deal now. So we've got the upcoming OPEC meeting, so it's likely he was more commenting about that, but he could have also been hinting at that Saudi story. And it's unlikely the Saudis are going to just, stick two fingers up at all these OPEC deals and just start blasting the market to take market share, because that would just upset the apple cart and then everyone will start doing it and then we'll have oil down at $20 and they'll all be screaming again. So never rule it out, but it's a low risk chance, I think, from now. Right, that's it from that. Got through that lot pretty quickly. Let's start to have a look at markets and what's going on. So as mentioned, we are seeing a bit of risk on again, as just shown with commodities like copper there. If we look at oil, we did have this drop coming on that headline, as mentioned, quite a decent drop, couple of bucks. It has bounced a bit since then. It has been waffling around the 68 level since then. Again, this is one of those context moments for oil, because we know what's at play. We've got fundamental weakness, which is the entrenched theme. We know that manufacturing has been in the mud, so that's been why oil has been a big hitter on rallies. But then we've got the geopolitical risk, which has come through, the kicking off with Israel and Hezbollah in Lebanon and whatnot. We've also had this risk on move with these rate cuts being seen as good for global growth. So there's two factors at play for oil, and in particular. One side, you've got what's actually happening, poor fundamentals. On the other side, you've got a bit of hopium that these rate cuts will boost growth, China being the case in point, and you got the ongoing Middle East situation. The fundamentals will always win out over the hopium trade, okay? Because the hopium trade needs to turn into real moves. So that's why I'm not expecting oil to be shooting all the way back higher. It could still creep back higher on this risk on mood, but until those fundamentals change, it's always likely to find stiff resistance as it goes up, as it did the other day when we hit a pretty significant zone. So it was at that point the sellers went, no, that's enough. Your hopium doesn't match the fundamentals, so we're going to give it a spank on the head again. And then that story did the rest today. It doesn't quite break this uptrend. If we continue to hold here, that will mark a decent step around this the bottom of this zone, 68 or 67 level. That's a nice move, because we had support down there before, then we had the break under. It didn't last. We held after a move above, and we've held again in this move. So that's supportive of this maybe going back higher. Okay, we had some short-term intraday higher highs, higher lows, but now we've got a bigger period of time between them that we could be set up again another move of higher highs and higher lows. So it's a bit in the balance, but if we do remain holding here at 67, then maybe we'll go and take a crack at that zone and push on up. Again, watch your risk headlines regarding Israel and whatnot. Yeah, exactly that, Gavin. It really is getting pulled in different directions, and those drivers come in, fits and spurts. So 1 minute we're watching PMIs and oil's moving on those, another we're moving on risk and rate cuts and all that stuff. So yeah, two-way markets, as we like to call them, which is good for trading either side. Gold, that's continuing to plough on up. Again, no real signs yet of a highs. Maybe we're matching that prior high. It's looking pretty strong. So if we get a hold here and a move back down, then we're potentially setting up for a bit of a range play. But we shall see. So, if you're short up here, where your pain level is. If we break in 2670s, then we're off to the races again. Support is being confirmed around this 2650. This was just a little line I drew in, just basically on the 15-minute chart. Just a little, this is where something may happen. It's all short-term stuff. It's just where I look to see how the price action develops. At the moment, this is the level that we've got to get under if we want to see a further move south. And that just came off the back of these little moves here. Now we see what happens up the top here. As I say, need to get above 2670. If we don't get above there over the next few hours, then we may get a pullback to 2650, and then you need to see what happens there. Over in FX, and give me one moment because I do believe Gregor is coming in, but I can't see him yet. I might need to promote him. Just hang on 1 minute. Let's see if he's in the old list. Boom, 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 boom. Oh, there he is. Let me get him up. Sorry, mate. Where's he gone? Oh, he's put his hand up. Right, there we go. Let's get him in as panelist. Right, he'll be joining in a second, so I'll just crack on for now. I'm just going to go over a couple trades that I'm still in and knocking around. Euro dollar, this was a bit of a big one yesterday. I got a bit lucky, I have to admit. I had my buy stop 112.15 and we got to 112.14 before it cracked the bed and fell out. I still managed to give Mr. Market some money because I did try a little long there into this support while it was looking like it was holding, just to see if it held there and then cracked on back above 112, but that wasn't to be, and we've had a little bit of falling out of bed as we got some dollar strength coming in yesterday. But it's keeping the momentum going. So we've had a little nibble under this 30 area, so I might get rid of that line, wash it out a bit, and leave it down to sort of the 111s. Now we're just deciding what we want to do. We have had a creep up, but I think if we get a quick return to this 112, then it raises the prospect that any break then is going to be the one that it goes on. But also we could just as easily hit our head around 80, 90 again, not get through. And if that happens, then I think we are potentially running the risk of seeing a deeper pullback on the back of that continued failure up there. So still big question to be asked of this 112 level. I'm still long. I did pull my stops up a little bit now. I'm not quite ready to bring it above this zone into 111s, but I may do if we get another test and failure of that 112, just tighten up my trailing stop behind it. Dollar yen, that had a little pokey above 145. This is one of those big levels that goes back years. I won't go all the way back, but I'll just go back actually to when we were coming up. It was a massive level on the way up. As you can see, we hit that and then we went all the way back down to 137. So it's one of those levels that will always see some action. Although we've been up and down it recently, so we have been here a few times of late. It's still a pretty significant level, if only if you use it as a pivot level. So if we get back above there and find us holding it as support, then we're probably going to get a push on a run up to 147, and that will be another huge level to take a look at. Last one, and I'll bring Gregor on board, is my dollar knock, which was, I had a bit of a get out of jail yesterday when I saw this move. Quite a strong move in the afternoon. It's playing nicely now. It's back above 10.55. I did take a big chunk off yesterday at 52 because I thought, well, that's a bit of a gift horse because it was looking pretty soggy for my longs. But since then, it's moved up 10.55, 56. We're holding it. We're going to probably find a bit of traffic, 10.62, 63-ish, looking like that already, ahead of 10.65, which is my main level up there. This is one I have brought my stops up. So my stops are now at 10.50, just below that level there. I'm not going to get myself in a offside situation like I was previously. So again, sometimes you need a bit of luck in trading, and that's what's happened with that. Last one, got a China, which isn't looking good and really not bouncing at all. So I may have to bite the bullet on my longs in this one. It's still holding 7, but I think if it moves under 7 now, we're heading a lot lower. So I'm pissing into a strong wind on this one. So I might just get out of that one. Gregor, how you doing, mate?
Hey, mate. I'm here. I'm fine.
Good.
Thanks.
Right. Yeah, all cool, mate. All cool. Now, Gregor, if you don't know, he's our master of Elliott waves, and he updates a lot of stuff on our platform, which I will show you quickly. Oh no, cancel that. Let's go there. Let's go there. So if you didn't know, we have all this analysis, and this is Gregor's domain, the old Elliott waves, and as you can see, he's updated a lot of stuff this morning. So if you're interested in your waves, another reason to take advantage of our sale, get access to this platform and all the goodness that it entails. Tons of stuff on here. You've got me updating stuff as well, pretty much every day, depending on the time and what I've got going on. But all the charts, everything you want to see, you can see the historical stuff. But anyway, Gregor, he's going to take us through some of his latest wave stuff. I'm going to hand the screen over to you now, mate.
Okay.
All yours.
Okay. Can you see the screen?
Yeah, all good, mate.
Okay. So actually, I will start with the US yields. Now, what's interesting about it is that US yields actually bottomed as soon as Fed cut rates last week. And dollar index actually at the same time was diverging a bit from it. So this kind of a price action can occur around the lows. So I'm thinking that yesterday reaction to the upside on the dollar might have also something to do with the US yields, because obviously if the US yields keep moving to the upside, there can be some limited weakness on the dollar. So maybe that's something that we should consider, because if I take a look on the US yields, I think that we are now in a just temporary corrective pose. We are breaking some trend line resistance right here. So maybe we are in another red wave 4 degree here. Now, if you're not familiar with the Elliott waves principle, just to give you a quick heads up here. So I'm tracking a higher degree wave C to the downside. And you can clearly see that that's an impulse because we have a very strong movement, right? And impulses should be structured by 5 waves, like represented here. And I'm still missing this wave 4 and wave 5. So I think that we are in a temporary corrective rally here, and that we could stop at the previous minor wave 4 degree, and then possibly I would be looking for more weakness. But now what I should focus on is that we are in a corrective stage here. So unless we see a corrective wave 4 completed very soon, then of course dollar could continue lower. But at this stage, I'm not really sure that's the case yet. And that's why dollar is struggling down here. what I see is even potential wedge can be forming here. And 100 level is certainly a very, very strong potential support here, and 9950. And also it's we have to consider stocks as well. I know the stocks keep moving higher. We have seen a very strong move during Asian session, but dollar is also up. So now the question is which one will find the right direction. Will maybe stocks came back to the downside, which obviously will open later on with a huge gap on the cash market, and maybe the stocks during US session will try to fill this gap, and that's the same time when dollar could possibly see even more gains. So overall, I just think that we should be prepared on this potential correction here on the dollar. But obviously, that's still going to be part of this higher degree downtrend, which in my opinion is definitely here. And sooner or later, we should attack this 99.50 level back from 2023. But I'm just thinking that because of the US yields that are currently on the rise or in this corrective phase, that even correction on dollar index could take a bit longer here. Also, if we take a look on dollar yen, as you know, has been one of the first that has bottomed here. Okay, even I think it was even before the US yield. So what we see here is also some breaking trend line here. And obviously, if dollar is really going to stabilize now and maybe see some correction back to maybe 101.60, 102 level, this obviously could make even better bullish case for dollar yen. But again, that's all just temporary and short term. Okay, so I would be looking just for a temporary correction. Very big resistance that we highlighted several times is around 149 all the way back and up to 152. So from there, I would be looking for more weakness. So why I think dollar yen could also see more upside. Obviously, stocks are higher across the board. And I think it's worth to keep an eye on Nikkei. Now, Nikkei is trying to break this resistance, maybe still this week will happen. And obviously, if that would be the case, we could be seeing dollar yen pushing even higher as well. You can see that both made these swing lows, but this made the higher swing low on Nikkei, while here we have seen a lower swing low. But obviously, both are swinging and making the very similar cycles here. So if stocks will keep rising, especially in Japan, I think that this obviously could make Japanese yen even weaker, especially during the phase when we are in a correction on the US yields. Okay. Also, what I want to talk about is maybe Aussie. So Aussie is obviously very bullish. You have everything here on this chart. What's important, you have Hang Seng Index, copper, you have, let me expand here, you have gold. Everything is in favor of Aussie uptrend. So I'm thinking about more upside on Aussie. We have some very nice support that has recently been tested at 0.6820, but possibly there can be a bit of more deeper price action here or correction in the near term. I would be watching this 38.2%, which is the first fib level of this retracement. Normally that I pay a lot of attention, at least to 38.2%. Otherwise, the pullback is just too small to look for potential trades here. So the deeper support is at 67.80. But not only Aussie versus US dollar, I think that much more attractive could possibly be Aussie versus Swiss franc, especially because of Swiss National Bank has cut rates. They even said that they could be looking for further cuts in the future and maybe even intervene if there's a need for that. And looking at the wave structure and direction, definitely we cannot ignore that we have a very strong uptrend here. So I'm thinking about more upside after this next wave for pullback. You have some very nice swing support that has been retested a few times here around 57.90. So if we can see once more a retest of this support, I would be looking for potential longs here to catch this upside for a wave 5, especially considering that Aussie maybe in the near term could test a little bit lower support levels to come to better entry points. And then you have obviously just the risk on flows and strong metals that can keep us in uptrend. And the other side of that coin, as I said, Swiss National Bank is obviously those actions are making bearish Swiss franc. Quick look also maybe on gold. Some resistance here The channel one, the parallel channel, is around to 670 or so. Definitely a very strong uptrend, but not, I don't suggest any chasing here. I still think that buy a dip is the best approach. The support, if suddenly we see a, let's say, a pullback from there, would be around 2,600. Ryan also mentioned crude oil earlier. We stopped perfectly at this potential triangle trend line from the outside. So I'm thinking that maybe we are going to attack at some point these lows that goes back to 2023. I certainly would expect more weakness now when we hold this 273 zone. If this one is broken back to the upside, then the price will be moving back into this triangle range, and this could keep things a bit tricky here and even sideways. But for now, as long as we are holding this level, I just think that there is a chance that crude oil will see more weakness, especially after recent sell-off, which seems to be quite sharp here. Okay, Ryan, that's it. I hope that some of you got some of interesting information here.
Yes, thank you very much, mate. Yeah, is that what you want to show for us today? Or if you want to, if you've got a couple of others you want to look at?
No, actually, that's it. So
yeah, cool.
Yeah.
Oh, great stuff as always, mate. Thank you very much. Always nice to get another viewpoint, another technical aspect on charts and price moves or whatever. And it's
when I started to use Elliott waves, I just cannot look at the markets any differently. Maybe that's not the best, but once you are in it, you're totally in it. So
yeah, you do what works, isn't it? I've never looked at a wave in my life, mate. Any waves I see are in the sea. But people, you use this tech to your advantage very well. Probably one of the best people I know at it. So you're always a good follow, mate, and you do a great job on our platform as well, keeping the markets updated and our customers updated. So hats off to you, mate. Good stuff.
Thank you, man.
Right, I think we'll call that a session. Dimitris, just speaking about oil, yeah, I see where your fib is. It's right up against my zone. I'm going to just take the screen back just for 2 seconds just to show that. Your fib, I think, is around about that 68.70, which is a bit of a zone already, Dimmy. So yeah, I'm not surprised to see it running into trouble there. But as I said, if this risk move carries on, then we're probably going to see a move back up above and another attack on 69. And it held where it held, 68, 68.20. So the techs are playing nicely. And when that happens, that can bring you some good trades. Right, on that note, we will call it a day. Thank you very much, everybody. Take care trading through those central bank speakers later, or you might want to go and watch your grass grow or something else. But that's what's coming. Have a great day, everybody. Thanks again, Greta. We'll see you all tomorrow.
Bye-bye.